Hello friends. I am Sherry, investor awareness champion from Better Cards. Today I will talk on a super exciting topic, mastering wealth with REITs, hassle-free real estate investing. Traditional property investment often demands substantial capital and hands-on management. Enter real estate investment trusts, REITs, a modern, accessible, and disciplined path to harness the power of real estate without the typical hassles. What REITs are, and why they matter. REITs are specialized vehicles that own, operate, or finance income-producing real estate. By pooling investor capital, they acquire diverse property assets, office buildings, malls, apartments, warehouse, hotels, and more. They offer a dual proposition: 1. Regular income through distributions. 2. Potential capital appreciation as property values and rents rise. REITs offer following key advantages: liquidity, traded on stock exchanges, providing ease of entry and exit. Diversification, low correlation with traditional assets such as stocks and bonds. Transparency, regulated, audited, and required to disclose financials. Accessibility, real estate exposure with relatively modest initial capital. The types of REITs. REITs cover a broad spectrum of property types, each with its own growth drivers. For example, office REITs, long-term leases with corporate tenants. Retail REITs, shopping destinations, retail hubs, and lifestyle centers. Industrial REITs, warehouse and logistics parks riding the e-commerce wave. Residential REITs, urban rental housing with strong demand. Hospitality REITs, hotels and resorts tied to travel and business activity. Healthcare REITs, hospitals and senior living with stable tenants. Data center and infrastructure REITs, digital infrastructure powering the cloud and connectivity. India's REIT journey began in 2019 with Embassy Office Parks REIT and has since grown to include 5 listed REITs: Embassy Office Parks, Mindspace Business Parks, Brookfield India REIT, Nexus Select Trust, India's first retail-focused REIT, and Knowledge Real Estate Trust. The market remains young but has following powerful tailwinds: 1. Concentration in Grade A office spaces, especially in IT and BFSI hubs, reflecting India's status as a global office market. 2. A long-standing trend of rising office stock, with a substantial increase since 2000 and ongoing development in top cities. 3. Attractive pricing relative to global peers, offering a compelling base for rental growth and capital appreciation. 4. A fertile ground for diversification as the market expands beyond offices into warehouse, hospitals, data centers, and other asset classes. Following are some growth catalysts. Corporate expansion across technology, finance, life sciences, semiconductors, and other sectors is supporting multi-sector leasing demand nationwide. The evolution of logistics and manufacturing directs attention to modern, tech-enabled warehousing and distribution networks. Data centers and digital infrastructure are becoming essential in a digitized economy, creating durable, long-duration lease opportunities. A broader global rate cycle is unfolding as central banks ease rates, potentially lifting valuations and distributions. Globally, REITs command a massive footprint, owning trillions of dollars of real estate and operating in more than 40 countries. The United States leads in scale, followed by Japan, Australia, Singapore, and parts of Europe. In the current macro backdrop, rate cuts and easing monetary conditions can lift rate earnings and valuations, particularly for sectors with durable demand: data centers, healthcare facilities, industrial logistics, residential, and hospitality. For Indian investors, the opportunity is twofold: benefit from the structural strength of India's urban, professional-grade real estate market, and access a broader, globally diversified REIT ecosystem as the domestic market matures and expands into new property types. To summarize, following are the key takeaways. Consider REITs for core income and growth potential, especially for those seeking passive exposure to real estate. Build a diversified REIT sleeve across sectors: office, retail, industrial, data centers, to capture secular demand drivers and mitigate idiosyncratic risk. Use REITs to supercharge portfolio diversification, given their lower correlation with traditional equities and bonds. Be mindful of the macro backdrop. Lower interest rates generally support rate valuations and distributions, though individual rate dynamics vary by asset class and management quality. In markets like India, recognize the long-term runway as assets diversify beyond offices into logistics, healthcare, data infrastructure, and more. Real estate need not be overwhelming or inaccessible. REITs offer a disciplined, scalable way to own income-producing properties, aligned with long-term wealth creation goals. If you are ready to embark on this journey, Better Cards invites you to partner in your wealth creation journey. For guidance, reach out via WhatsApp. About Better Cards. Founded by Ashutosh Agrawal, a chartered accountant and advocate for financial literacy in India, Better Cards champions investor education and practical wealth-building strategies for a growing, informed audience. Important disclaimer: the information above is for educational purposes and does not constitute a personalized investment recommendation. Investments in REITs carry risks, and readers should perform their own due diligence and consult with a financial advisor before investing.